Welcome to The Deep Dive, your shortcut to being well-informed.
Glad to be here.
Today, we're really digging into the second quarter 2025 results and the business updates from Oklo Inc. They're an advanced fission developer.
Right, a fascinating company in a very hot sector right now.
Exactly. So think of us as your, let's say, personal earnings call summarizers. We'll cut through the noise and get you the essential insights from their latest update.
Let's do it.
Okay, so let's kick off with the headline numbers for Oklo's Q2 2025. They reported a GAAP EPS that's earnings per share of negative $0.18.
Which was actually below what the analysts were expecting, right?
Yeah, it missed consensus.
Yeah.
And as you'd expect from a pre-revenue company, zero revenue reported for the quarter.
Makes sense at this stage.
And their operating loss landed at about $28 million.
Okay, so standard pre-revenue stuff in some ways.
Yeah.
But if you were watching the market reaction right after the release...
Yeah. What happened there?
Well, the shares definitely dipped immediately. No surprise, given the EPS miss. But what was interesting, I thought, was how quickly that initial reaction sort of leveled off. It moderated pretty fast.
So suggesting maybe the market looked past just the loss figure.
Exactly. It felt like the market started absorbing the broader strategic context, the updates beyond just the bottom line. Sentiment definitely became more cautious, maybe balanced, but not outright negative.
Okay. That's an important nuance. So that $28 million operating loss, it sounds like a chunk of change, even for a pre-revenue company.
It does.
But then you see this number. Oklo ended Q2 with roughly $683 million in cash and marketable securities.
That's the key figure, isn't it?
Well, yeah. I mean, how does this massive cash pile really de-risk things in such a capital-intensive industry like advanced nuclear? Or is it just, kicking the can down the road, extending the runway without fixing underlying challenges?
That's the critical question, absolutely. And look, that cash balance is vital. It's non-negotiable for a pre-revenue company in this sector.
Right.
They need that capital. And the company, importantly, reiterated its full-year guidance for cash used in operations. They expect it to stay between $65 million and $80 million.
Okay, so they're sticking to their spending plan.
And what really beefed up that cash position was the follow-on equity transaction back in June. They pulled in $460 million in gross proceeds from that.
Ah, right. That explains the big jump.
Yeah. So this liquidity, this $683 million, it provides a very long runway. And that's just crucial for bridging that gap until they generate their first power.
And then scaling up after that procedure.
Exactly. Scaling those initial sites, it lets them absorb, potential bumps in the road, cost overruns, schedule slips without having to immediately run back to the market for more money.
That makes sense. It buys them time and flexibility. Okay, let's pivot now to the core business, the Aurora Fast Fission Powerhouse.
The main event.
Right. So Oklo reiterated its target for commercial launch looking at late 2027 to early 2028.
Still on track, according to them.
And we got a name for the constructor. QUIT has been selected as the lead constructor for that first Aurora powerhouse at the Idaho National Lab site.
That's a significant milestone, getting your main builder locked in.
Definitely feels like tangible progress. And they outlined pre-construction activities too, site mobilization, getting some early procurement done, groundwork, all scheduled to start this quarter.
So Q3.
Yeah, with a groundbreaking actually targeted for late Q3. That feels pretty soon.
It does. Things seem to be moving.
But, what are the potential hurdles here? Any unforeseen challenges in just these pre-construction steps that could maybe push back that late Q3 groundbreaking?
Well, sure. I mean, even with experienced partners like QUIT, you can always run into things with site work, right? Unexpected geology, maybe supply chain hiccups for initial materials. Even just bad weather could cause delays.
Always a risk.
But frankly, the bigger hurdles are often on the regulatory side, and Oklo seems to be making really good progress there.
Okay, tell me about that.
They completed phase 1 of their pre-application readiness review with the NRC, that's the Nuclear Regulatory Commission, for the Aurora INL combined license application.
And how did that go?
Really well, actually. The NRC apparently identified no significant gaps. That's a big positive. They expect to submit the actual phase 1 application early in Q4.
Okay, good momentum there.
And maybe even more significant, especially for their long-term plans of deploying lots of these. The NRC formally accepted Oklo's licensed operator topical report.
Well, licensed operator topical report. What does that actually do?
Okay, so think about pilots. An airline pilot gets a type rating for, say, a Boeing 747, right?
Right.
That means they can fly any 747, not just one specific plane.
Right, got it.
This topical report aims to do something similar for reactor operators. It streamlines future licensing by letting operators get licensed for the Aurora technology itself, not just for one specific power plant site.
Ah, so an operator licensed under this could work at any future Aurora plant.
Exactly. It's key for scalable, fleet-wide deployment. A very smart, forward-thinking move on the regulatory front.
That does sound efficient.
And just for transparency, they also launched a public regulatory dashboard so you can track their progress.
Okay, good to know. Now let's switch gears a bit and talk about something that sounds, well, potentially game-changing for the whole sector. This wave of federal actions supporting advanced nuclear.
Yeah, this is huge. It's not just one thing. It's a multi-pronged push from the federal government. It feels like a complete reframing of how civil nuclear is viewed in the U.S.
Okay, break that down for us. What are we talking about specifically?
Well, first, earlier this year, you had executive orders signed. These officially designated civil nuclear energy as a national and economic security priority.
Okay, strong language.
Very. And these orders directed the DOE, Department of Energy, and the NRC to speed up their reviews. They set a really ambitious goal: 3 operational advanced reactors by July 2026.
Wow, that's aggressive.
It is. The orders also push for revitalizing the domestic nuclear fuel supply chain, focusing on recycling. And this is critical, explicitly targeting deployment at national security locations.
Military bases and the like?
Yes, and also, significantly, AI data centers, which are incredibly power-hungry.
Right, we hear about that constantly.
And on top of that, licensing reform was mandated capping fees, setting an 18-month review window for new reactors, trying to cut the red tape.
Okay, so that's the executive action side. What about legislation?
Then, in July, a major piece of legislation got signed. Some are calling it the One Big Beautiful Bill for Nuclear.
Catchy name. What's in it?
It preserved really robust investment and production tax credits at the PTCs and ITCs through 2033, with a phase-out through 2036. That provides long-term financial certainty.
Crucial for big capital projects.
Absolutely. It also strengthens loan programs, setting up something called the Energy Dominance Financing Program. It speeds up NEPA environmental reviews, and it allows 100% bonus depreciation for assets starting construction by 2029 and in service by 2033.
So a whole suite of financial and regulatory incentives.
Exactly. And then also in July, the Federal AI Action Plan came out. And it's explicitly named advanced nuclear reactors as essential for providing the reliable, dispatchable power needed for the U.S. to maintain AI dominance.
Okay, so connecting nuclear directly to national competitiveness in AI.
You got it. It's a powerful linkage.
So what does all this mean on the ground for a company like Oklo? How direct are these benefits?
Oh, they are incredibly direct and powerful. It's not just, slightly better project economics. It means significantly reduced permitting delays. Much greater certainty for these first-of-a-kind deployments.
Reduces risk.
Hugely. But the part that might be truly transformative, these actions unlock access to key government fuel stockpiles.
We touched on this, but what kind of fuel?
Enriched uranium, yes, but also plutonium-based materials that crucially don't require further enrichment. This stuff could potentially fuel over 3 gigawatts worth of Oklo's powerhouses.
3 gigawatts? That's a lot of power.
It is. Essentially, the government is saying, here's this material, often considered waste. You can use it as a valuable fuel resource.
That's a massive shift, turning what people think of as nuclear waste into a treasure trove, almost.
Pretty much, yeah. Nuclear trash to treasure, as you said.
So speaking of fuel, let's dive deeper into Oklo's strategy there. They highlighted it as multifaceted and differentiated.
It is. It's built on 3 main pillars or sources.
Okay.
You've got those government stockpiles we just talked about. Then you have commercial supply partnerships. And third, their long-term plan involves recycling capabilities.
All right, let's unpack that. Government stockpiles, we know they got an award back in 2019, right?
Correct. 5 metric tons of HALE, that's high-assay, low-enriched uranium, the fuel many advanced reactors need from the DOE for their first powerhouse.
And now they can potentially access these other stockpiles, the enriched uranium and plutonium materials you mentioned.
Exactly. They seem uniquely positioned to utilize this stuff, turning what's essentially a government liability, in some ways, into a productive asset that could fuel dozens of their early units.
Okay, so that's pillar 1. What about pillar 2, commercial supply?
Right. So for near-term domestic HALEU supply, they're working with established enrichers, like Centrous, standard commercial partnerships.
Makes sense, covering their bases.
And they're also looking a bit further out, collaborating with a company called HECCIM on next-generation enrichment technology specifically atomic vapor laser isotope separation, or AVLIS.
AVLIS. What's the potential benefit there?
Potentially more cost-effective and scalable HALEU production down the line. It's a longer-term R&D play, but important for future costs.
Okay. And the third pillar, recycling.
This is maybe the most interesting part, long-term. Oklo's reactors are fast reactors, and they're designed specifically to be able to use recovered nuclear material.
Recovered from where?
From spent fuel, from today's existing nuclear fleet, and from future advanced reactors, potentially even their own.
So, closing the fuel cycle.
Exactly. It enables a true closed fuel cycle, which offers potential long-term supply independence. You're not constantly relying just on mining new uranium.
And what does that do for the waste problem?
That's the other key benefit. This approach can significantly reduce the volume of the final nuclear waste and also shorten the half-life of what remains. So it tackles the waste management challenge head-on.
And the economics.
They noted that this recycled fuel could potentially be considerably lower cost than mining and enriching fresh fuel. If that pans out, it fundamentally changes the economic competitiveness.
Lower fuel costs, less waste. That sounds like a pretty compelling package.
It is, if they can execute on it.
Okay, let's look at their commercial momentum now. Partnerships seem key here. They mentioned a growing pipeline, around 14 gigawatts potential across different sectors.
Yeah, data centers, defense, utilities, industrial customers. It's a broad mix.
Can you walk us through some of the key partnerships they highlighted? Which ones really stood out?
Sure. First, there's the collaboration with Liberty Energy. This one's interesting because it's about integrated power solutions.
Meaning?
It starts with Liberty using its existing assets like gas generation and load management, and then phases in Oklo's nuclear powerhouses as they become available. It offers customers a smoother transition to clean energy.
Ah, a bridge strategy. That's clever.
Very practical. Second, and this is a big one, the U.S. Air Force selected Oklo as the intended awardee for the first advanced fission deployment at a U.S. military base.
Right, we mentioned the national security angle.
This is the concrete example. Oklo would design, build, own, and operate a powerhouse, providing electricity and heat to the installation. It's a huge vote of confidence and validates the technology for critical infrastructure resilience.
Definitely a flagship project. What else?
Third, they signed a MOU Memorandum of Understanding with KHNP. That's Korea Hydro and Nuclear Power.
A major international player.
Huge. The MOU is to explore collaboration globally, project development, licensing, manufacturing, supply chain coordination. It opens doors to international markets and KHNP's deep expertise.
Expanding their horizons. Okay, one more.
And fourth, a joint development agreement with Vertiv. They're a leader in data center infrastructure.
Ah, the AI connection again.
Directly. They're focused on co-developing integrated power and cooling solutions, specifically for data centers. This leverages Oklo's ability to put the power source right next to the computers.
Co-location.
Right. And they can use, for instance, the steam generated by the powerhouse to help run chillers for cooling the data center. Improves overall energy efficiency.
Very integrated. So looking at these partnerships, it feels like they're not just signing deals, they're building an ecosystem, right?
It's exactly the sense I get. These strategic partnerships are designed to accelerate deployment, build out the supply chain, compress the time to market. It's about creating the conditions for faster, more efficient scaling.
But that brings us back to execution. Building an ecosystem is great, but you still have to deliver. What are Oklo's core competitive advantages as they see it, and how are they tackling the risks involved?
Good question. Core advantages. First, their business model. Build, own, and operate.
Why is that an advantage?
It creates recurring revenue streams, unlike just selling reactors, and potentially streamlines some regulatory aspects because they maintain control.
Okay.
Second, the design itself. Small, scalable units. That allows for quicker deployment, matching demand incrementally, and using factory fabrication, which reduces complexity and cost at the actual site.
Factory building, site assembly?
Pretty much. Third, the technology basis. It's derived from proven liquid metal fast reactor designs, like the EBR-2 reactor that operated for decades. This lets them aim for direct commercialization without needing a separate multi-billion-dollar demonstration plan first.
Saves time and money.
Potentially, yes. And it also gives them fuel flexibility, as we discussed. Fourth, they talked about improving the idiot index.
The what index?
The idiot index. It's kind of an engineering term, basically. The ratio of the actual delivered cost of something versus the raw material cost. A lower index means less added costs from complexity, manufacturing, etc.
Oh, okay. How are they lowering it?
by relying heavily on inherent and passive safety features in the reactor design. This reduces the need for complex, expensive, redundant safety systems often required in traditional nuclear plants. They claim about 70% of components can come from non-nuclear supply chains.
That's a huge claim, using standard industrial parts for most of the plant.
That's the goal. Modernize the supply chain practices is key to that. And we should also mention atomic alchemy, their side business in radioisotopes.
Right, medical isotopes and such.
Exactly. They started site characterization and submitted a materials license application for a demonstration facility at INL. The idea is to generate some earlier revenue from selling isotopes while the powerhouses ramp up.
Okay, so multiple angles. But that idiot index and using non-nuclear supply chains, it sounds great. But how hard is it really to integrate all that and keep costs down in nuclear with all its regulations?
That's the million-dollar question, isn't it? Or maybe the billion-dollar question.
Probably, yeah.
Integrating non-nuclear suppliers requires really meticulous quality control, maybe developing new regulatory pathways. But the potential cost saving is enormous if they pull it off. It's definitely where the rubber meets the road.
So what are the key execution risks then? What could trip them up?
The big ones are pretty clear. First, getting those NRC licenses on time. Second, ensuring consistent availability of HALEU and these other advanced fuels. Third, managing the cost of the first-of-a-kind builds, keeping those FOA costs within projected targets is crucial.
Schedule and budget, basically.
And schedule discipline, absolutely.
Yeah.
Their credibility really hinges on hitting these near-term engineering milestones, regulatory steps, site work progress, all while managing their cash burn effectively.
Makes sense. And what about catalysts? What should people be watching for?
On the positive side, look for more customer announcements. MOUs turning into firm power purchase agreements, or PPAs.
Right.
More site announcements beyond INL. Concrete updates on the NRC licensing process, step-by-step progress, and tangible steps forward in securing those fuel supplies.
Okay.
And don't forget the macro picture. Those tailwinds, surging AI and data center power demand, strong bipartisan support for nuclear, are genuinely constructive for their valuation case. And that ability to tap existing government plutonium and uranium stockpiles, that could significantly ease the pressure on near-term HALEU supply and give them a real cost edge.
Right. So connecting this back to you, the listener, Oklo is definitely positioning itself right at the intersection of some massive trends. Energy independence, national security, and of course the almost unbelievable power demand coming from AI data centers.
It's a powerful narrative.
And it's worth understanding the difference between behind-the-meter and front-of-the-meter deployments. Behind-the-meter means the power is generated and used right there, on-site, like directly powering a data center, bypassing the main grid.
Reduces grid reliance.
Front-of-the-meter means they're selling power to the grid, like a traditional power plant. Partnerships like the one with Liberty Energy seem designed to bridge these models, offering flexibility to get those firm orders signed faster.
Yeah, it's about meeting customers where they are. And zooming out a bit, Oklo's whole approach really fits into this broader momentum we're seeing for small modular reactors, SMRs, and this big policy shift trying to accelerate nuclear deployment overall.
But the market will be watching execution like a hawk.
Absolutely. Consistent delivery on their pretty aggressive timeline and cost targets is key.
Okay. Before we go further, just that crucial reminder, this is absolutely not financial advice.
Nope.
We're just offering ideas here for you to consider, but always do your own homework, your own due diligence before making any investment decisions.
Please do.
Our next segment has purely speculative, maybe outrageous but plausible trade ideas. It's really just for your entertainment and maybe to spark some thinking.
All right, ready for an outrageous but plausible one on Oklo.
Let's hear.
Okay, here's the idea. Consider initiating a long position in Oklo, ticker OKLO, with a, let's say, significant allocation. At the same time, consider shorting a basket of high-growth, pure-play renewable energy developers, specifically the ones heavily reliant on intermittent sources like wind and solar, and therefore also heavily reliant on battery storage to provide anything close to baseload power.
Okay, long Oklo, short intermittent renewables plus storage plays. What's the rationale behind that?
The core idea is that the market is, we think, significantly underestimating the impact of unlocking those government HALEU and especially the plutonium stockpiles for Oklo.
The waste-to-fuel angle.
Exactly. It could dramatically change their cost structure and how fast they can deploy.
Okay.
Oklo isn't just building reactors. They're potentially leveraging existing waste as a uniquely low-cost fuel source. They're turning a government liability into a corporate asset.
A unique advantage.
We think so. Combine that fuel advantage with the validation from the U.S. Air Force award and the explicit backing in the federal AI action plan, it starts to position Oklo less like just another energy company and more like a mission-critical infrastructure provider.
For national security and AI enablement?
Right. Meanwhile, many pure-play renewables face growing challenges and costs integrating with the grid, and massive costs for the battery storage needed to provide 247 power for things like data centers.
Which Oklo provides inherently.
Inherently dispatchable power. And with that shrinking idiot index they're aiming for, we think Oklo could undercut those perceived green alternatives on the true levelized cost of energy, or LCOE, much faster than analysts expect. Especially for these high-demand, must-have power customers like data centers and military bases.
So the thesis is the market got distracted by the short-term EPS miss.
And missed the much bigger picture. Policy-backed, potentially waste-fueled, national security-aligned energy dominance. That's the outrageous but plausible case.
Interesting angle. Okay, let's wrap this up. To recap the key takeaways from Oklo's Q2 update.
You've got that very strong liquidity position, first off.
Right, big cash balance. Then, tangible progress on the Aurora powerhouse, picking a constructor, starting site work.
Don't forget the strategic, multi-pronged fuel strategy, especially leveraging those government stockpiles.
And that expanding network of critical partnerships across defense, data centers, and industry.
So look, the company is still pre-revenue. There are absolutely real execution risks here. Bringing any cutting-edge tech to market is hard.
No doubt about it.
But you have this confluence of their specific technological innovation, these incredibly strong policy tailwinds, and just surging demand from energy-hungry sectors like AI. It creates a really compelling, albeit high-stakes narrative. Definitely warrants serious attention.
Absolutely. And one last time, remember, none of this was financial advice, just information and ideas to help you stay well-informed.
Do your own research.
We definitely encourage you to dig deeper into the materials yourself, explore these developments further. Until next time, stay curious.